Okay, I'm going to bring those charts up. Share screen. Okay, you guys can see you can see the Bitcoin and the Ethereum charts now.
Yes.
Yeah.
Yeah.
This is both on the 1 hour. You can see here, you can see Ethereum's sitting on the support here. Let me just, and it looks like it. Let me just silence those alarms. I've got alarms on my other computer. Okay, they're quiet now. Ethereum sitting on the support here, this horizontal support, and there's actually the 10-day moving average is also sitting here. So it broke out above the 20 last night. And very often when you have false breakouts, this almost looked like a false breakout. False breakouts are actually very reliable patterns to trade, because if something breaks out false and comes back, then you know it's going to go the other way quite strongly.
Okay.
Meaning going down. It'll go, if it's broken
Yeah.
out and gone up quite fast, then it'll go down eventually.
Yes, if that was a false breakout to the top,
Yeah.
when we put it on the 4 hour, you can see there's this trend line as well coming down here.
Yeah.
So that trend line was also resistance, and the 50 Fibonacci, and that level there, that was all resistance, which is rejected. And as I said, you guys obviously read my posts that I did this morning.
Yeah.
Because I explained everything pretty well in there. So at this point in time, this still looks like an ABC correction.
Yeah.
You see it's also coming onto this support here. And this support is also roughly opposite the 50 Fibonacci. You can see here's a trend line I drew in here as well. And it's actually sort of sitting on that trend line as well now. So, yeah, and then Bitcoin also looked like an ABC correction. You can see it clear on the 4 hour, this ABC. And it also, there's the 10 and the 20. It broke out above the 20. Now it's sitting back below the 20, back below the 10. So Bitcoin is actually looking worse than Ethereum is at this stage, because this C leg that went up here, I'm going to do Elliott wave theory today, and once I've done Elliott wave theory, you'll understand why this looked like it could be a new impulse. Now Bitcoin sitting here also on these trend lines, acting as support, because these trend lines go right back to the top. This one goes right up to the top there, and this other one I've drawn through here from this top through there like that. And it's the 50 Fibonacci level there. And this is that head and shoulders I was talking about this morning. This head and shoulders. Graham, I think head and shoulders was the one lesson that you missed, where we spoke about reversal patterns. So this is a typical reversal pattern. It's not a continuation pattern. And it looks like a shoulder, a head, and a shoulder. And that should theoretically, if this is a head and shoulder, it should break down to this level. This blue line, I've measured the height here. So a head and shoulders pattern, if it breaks down, will always break down the height of the base. That's the neckline. That's the neckline over there. You've got a shoulder, you've got a head and a shoulder. And the height of the head, it will normally break down to that level. And that coincides with the 61.8 Fibonacci retracement from that top to this bottom here. So this is what I said. This is a definite buy area, because even if it ends up eventually going through this level, because of this being a correction, this ABC, it will still bounce here. So one can buy here, and then you look at the way it comes off this level, how high it bounces, and the nature of the bounce. But you can still make money there. And if it then turns and it comes back down, at least you close your position and you shouldn't be in a loss, even if you didn't take profit on the bounce. You can then just close your position when it gets back to that level. Am I making sense?
Yes.
Yeah.
I just want to let me just pause. I just want to find out where Jacques is.
Sure, I'll be back in a minute.
Okay. All right, let's have a look at the Bitcoin chart then. You guys can see this chart.
Yeah.
April.
Let me just make 100% sure that this is recording now. I wonder how I see that. Right, wait, let me just stop this share quickly. Let me just go and check here. Okay, no, the recording is okay.
It says recording on my screen.
All right.
Yeah.
All right, so now you can see this. This is a Bitcoin chart. I've gone back here. This is now going right back to, on the bottom left here, this is June 2019. Now, I'm not saying that this count that I've put in here is correct, because, and that's where Elliott wave theory can become confusing. Over the years, I've followed and subscribed to a couple of guys who do only Elliott wave theory analysis. And
Where's your collar, Graham?
Yeah, I've taken it off for a break.
so, and you sometimes find that the way that people number Elliott waves, in other words, you see I put these numbers in here, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, all these numbers. So this becomes, the way you number it when it gets to impulsive structures can become very subjective. And that's why it's very important that if you start looking into Elliott wave principle, that you combine it with normal basic drawing of trend lines, normal support and resistance levels, reversal patterns and continuation patterns. And there's a lot of guys who trade, who only use the basics, who only look at trend lines, channels, support and resistance levels, and continuation patterns. But I feel it's important that you understand Elliott wave theory. And what I find helpful is, on the shorter term, is to identify what mode the market's in. Is it in an impulsive mode, or is it in a corrective phase? And if it's in a corrective phase, you can identify it as a corrective phase, and a corrective phase is going to be a very good buying opportunity. So even though this numbering I've put in here, and I'll go through this numbering now, even though this numbering might be wrong, I can still see that this was clearly impulsive, and I can see at the moment that we're busy with a correction over here. So, and that's what's important. And we'll have a closer look here just now. but let me just go through a couple of things here. I'm going to go now right back, and I've squashed the chart because I'm going so far back. I can make this a bit bigger. Okay, you guys see I've drawn in a vertical line here, and that's opposite this first number 1 here, and there's a 2. Okay, Craig, you with us?
Yeah.
There's the first leg up, and there's a second leg down.
First leg down.
No, that's the first leg up, then a second leg down, then you get a third leg up,
Okay.
third leg up,
Uh,
and then a fourth leg correction, and then a fifth leg up. Okay. Now, I'm going to just zoom in now, and I'm going to look at this vertical line here, this first number 1. So I'm just going to scroll left. Let me just squash it a bit. No, it's not that one. Here it is. Yeah. This is going back even further. This is going back to 2017 now, when there was a first impulsive structure, and then there was an ABC correction in here, and it came back down to this level. Now I'm looking at it from this point here, which is December 2018, up to this number 1. So what this looks like is your first leg up, and then the second leg down. So in here, you can see there's an impulsive structure.
Jacques, can I ask you just,
Uh,
you often use a word like impulsive structure. Do you mean, what does that mean? Do you mean an impulsive structure is when it's going up? Do you mean a corrective structure is when it's going down, or is a correction structure when it's moving sideways? It would just help me to understand what further is going on once I know what those words mean in your language.
All right. The impulsive structure from an Elliott Wave perspective is when we're in that first 1, 2, 3, 4, 5. It's impulsive, which means that the corrections are short, and then they market in a bull market. This is a bull market because the prices are going up. But your corrections are very small, short, and then you get the next impulse. So typically here you get an impulse up, then you get a correction. Then you get an impulse up, then you get a correction, and then you get an impulse up.
So impulses go up. Is that what you're saying? Impulses only go up.
No, if it's a bear market, the impulses will be towards the downside. But by impulsive, I mean that you're getting big candles. From your last correction, there's a much bigger move towards the upside before you get a correction again. These legs up are much longer than the legs down. So this is impulsive towards the upside because it's in a bull market here. If in a bear market, the impulses can be towards the downside. That means, so once again, your first leg up, your 1, 2. If I now look at this is an impulsive structure. This first leg up, and then the second leg down. Looking here, for example, this, it might not look, if I zoom in a bit, can you see the candle? The candles going up are much bigger. Here's a triangle. Then you get an impulsive structure again, and then you get a correction. Look at this is impulsive. You're getting big candles, and the prices are moving away from the moving average as well. This is an impulsive structure. This is a corrective structure. Okay. But this is impulsive because it's, if we look at Bitcoin, what happens here now since a month ago, the first clue that there's something else going on here, well, for a start, it broke a trend line here. It broke that trend line. Then there's also what I was talking about. There's already, you can already count 5 waves up here. So after 5 waves up, especially your 5th wave, you need to have a correction taking place. So this has been impulsive for a year, impulsing towards the upside. If you start counting the waves, you can also see that you've reached a fifth wave. And after a fifth wave, there's always a correction. Inside here, just inside there will be 5 waves. Inside here, there will be 5 waves. And then after 5 waves up, we need to have a correction. So it's impulsive towards the upside, long candles. We're sitting above the moving averages, which also shows me that we're in a bull market, and then it corrects. The correction is shallow compared to this impulsive structure, and it corrects onto the moving average. In a downward moving market like we're sitting at the moment since a month ago, the first clue as well that there was a problem here is this structure towards the downside is now impulsive. So up till there, we have been having impulsive structures towards the upside. Here's actually your first impulsive structure towards the downside. And if I go and look at the structure more carefully over here, since what happened since, that's the structure over here. We're now on the 4-hour time frame. That's the top where I've got this line in here. That's the top. If I squash the chart a bit, you'll see it's that top. I've got there 5. You see that number 5 there. Can you see that this is now an impulsive structure towards the downside?
Mm.
So that we've been having impulsive structures towards the upside. We've completed 5 waves. There's the divergence that we spoke about on Tuesday. Here's this massive divergence, which is even more clear, or even more clear on the this divergence actually goes right back to there. On the daily time frame, it's even more obvious. Look, we're getting new highs, and look at what this RSI is doing. There's already the first sign that there's a problem. Look at that massive divergence there, which is that top there. Then it goes, makes the new high again, makes the final high, and we're getting massive divergence. Plus it's 5 waves up. So this is when the impulsive structure came to an end. But getting back to what happened here now, this is the first sign that there's a problem. And that's the fact that this is an impulsive structure towards the downside, and you can actually count 5 waves here. You can count 1, 2, 3, 4, 5. So, and remember that I said that your third wave is normally the longest wave. So think about a bull market now going up. You've got
Gone.
wait, yeah, there's a place here that one can do drawings. Wait, I don't know if you can do it. I don't think you can do it while geez, I found it the other day. Place to do drawings. There's a place you can draw. Where the hell is it now? No, I can't find it. Okay, let me start this program. Let me share this. Oh, there it is. I found it. Okay, not necessary. I can close that. You guys can see this whiteboard now.
Yeah.
Yeah.
So we've been having 1, 2, 3, 4 is often a triangle, and then we have 5, and then but these have been impulsive structures. They're long candles. We're sitting above the moving averages, which are below here. We're actually running in a channel. We're sitting above our trend lines. These legs, this is a 1. This is a 1, 2, 3, 4, and a 5. We'll go look at the Bitcoin chart just now again. This is obviously, this is often as I say, a triangle.
And then
here.
there's a correction coming.
There's a triangle, and triangles are very often terminating patterns. But this is a continuation pattern. At this point in time, it carries on out of the continuation. But you must know after, you can see here as well, you've had a 1, 2, 3, 4. Now you know this is going to be your final leg up. And after your final leg up, there has to be a correction. Simple. Always.
Yeah.
In this leg up here, there's 5 legs. There's a 1, 2, 3, 4, 5. Then you get a correction. Then you get a 1, 2, 3, 4, 5. Then there's a correction. Now that's going 1, 2, 3, 4, 5. Now there's going to be a correction. But this correction here is not just going to be a small correction. This correction here, that I didn't tell you guys just now, but that's very important. This correction here is correcting this first leg up. So you have your first leg up. This correction is just correcting this leg. Then you have your next leg up. This correction is just correcting this move up. Now we have a 5th leg up. The correction that's going to take place here is going to be a bigger correction, because this correction wants to correct this whole move up. So now you don't just have a little ABC here. If this was just a little ABC, if this was just a correction like this, then it means that I've counted this wrong. Then this could be a 3 and this could be a 4, and there's still a 5th wave coming. Because if the correction here is small and it's only 38% of this leg, it means that this correction is only correcting this leg. But what happened in Bitcoin now is that, oh shit, is that this after it reached the 5th leg up, now we had a 1, 2, it could have been just a 3, ABC correction. You with me? But this happened. It started getting longer, and it did this, and it did a 4, and it did a 5. So up to that point there, this could have just been an ABC correction, and then the price would have carried on up. But this leg, this 3rd leg here, became longer, and it actually made an impulsive leg towards the downside. It made a correction, corrected this leg up and a 5th leg down. And then it went back up, and then the real shit started. Then it came down like that. Now that's also very important, because well, for a start, I'll go and show you the 5 leg, the impulsive structure that took place. Now, if you see 5 legs down, it means that after a correction, there has to be another 5 legs down. It's not just going to do 5 legs down as a correction and carry on going up. This is an A, then it's a B, and then C. Okay, so now I'm going to look at the Bitcoin chart again. All right. So here, there's our 5 legs up. There's our divergence on our RSI, which showed us that there's a problem. Here's the 5-wave down movement. Can you guys see it? 1, 2, 3, 4, 5. Can you all see that? I'll zoom in. There's a 1, 2, 3, 4, 5. Okay. This is an impulsive structure towards the downside now, which we haven't had before. Plus it's 5 waves. I can label this if you guys don't believe me.
That's fine.
1. I always put a question mark in when I start labeling, but that's a 1, 2, 3, 4, and here's our 5th leg down. Remember, this is like reading music. You might not see it in the beginning, but after a while, you guys will see it. So don't lose hope at this point in time. Remember, I said to you that the 3rd leg is always normally the longest. Can you clearly see that this 3rd leg down here is much longer than this 1st leg? And if you go and measure it, it's actually also longer than this 5th leg down here. This 4 is most probably there. It would have been an ABC. And then again, you get 1, 2, 3, 4, 5. You see, here's again 5 waves down. So this is the first indication to you that this correction, which we're now sitting in, remember, this correction is now carrying on. We're now sitting over here, right? But when this happened here, and it's 5 waves down, this is your A leg. So this becomes A. This becomes B. And now C is down here somewhere. C is either there, or I'm just going to squash it up a bit, or C is still coming down here. Forget about that 4 for a minute. So there's your first indication that there's a problem, because you've got an impulsive structure to the downside. It's 5 legs down. Your 3rd leg is the longest. After that, something like that, now we're going to a B. Now we're going to a B leg. Can you see that this is very corrective and overlapping? It's not impulsive. It starts off impulsive, but then it fades out. But even if you don't know Elliott wave theory, you had that trend line in there. That's where you should have got out. Your moving average is crossed over. You had the divergence on your RSI. So there were, and plus 5 legs up. So there was lots of warning that things are coming to an end here. You can also see how overlapping this price structure is. Can you see that it's not, can you see that this low here, this low doesn't go below this high. Now suddenly the price goes up, this comes back, this low comes below that high. Now, once again here, you could have drawn a trend line in. Here you get your B leg up. And remember I said to you ABC, sometimes you got to look very carefully, because I've been doing this a while. I can see the patterns a lot easier. But there's actually an A leg up here, there's a B leg down, and there's a C leg in here. Here's a 1, 2, 3, 4, 5. So inside this B leg up here, there's an A, B, C. So that's your first leg down, A, B, and then it really starts accelerating. The same way as this leg here is longer. This is an impulsive. Remember I said the third leg is always the longest leg. Now look at what happens here. This could actually be, it's an A or it's a 1. Okay. This is a B, or it's possibly, because I'm always looking at all the possibilities. This is possibly a 2. This is a C, or possibly it's a third leg. And then over here, if that's a 3, then over here will be 4 with a 5th leg that still has to come down here, 5. Okay, so.
And then it'll go up.
And then it'll go up. I can see you're starting to understand what I'm saying here. So remember, towards the upside, we've got 1, 2, third leg is always the longest. This is a longer leg, short correction. Here we've got 3, 4, here it goes up impulsively towards the top. The correction's shallow. This is all impulsive towards the upside. Now look what's happened here now. The first clue is here. It's impulsive towards the downside. The correction, which normally in our bull market here, the corrections are shallow. And they only come back 38% of these legs. Can you see now that this leg up, there was a Fibonacci ratio here from the top there. It came back to roughly 78.6 of this leg. It didn't exceed this top. So remember I said to you, one of the rules of your second leg can never be below your first leg. Coming back here, where I was just now, what I wanted to show you guys. I'm going to go right back to this first leg here. Over here. I was talking about here just now. This is now going back to 2019. Here you can count 5 waves up. There's the first 1, 2, 3, 4, 5. Okay. That's the Elliott wave, impulsive 5-wave structure up there. And you can go number it. You can put in a 1, 2, then you can say 1, 2, 3, 4, 5. So that's 1, 2, 3, 4, 5. Then we had this A, B, C correction, but you notice that that low there did not go below that low. That's why I can label that as a 2. Remember I said to you, one of the rules, your second leg mustn't go below the start of the first leg. So there you got your impulsive wave up, then you got an A, B, C correction. It didn't go below that level. Now the new impulse starts. Inside there, you can already count 5 waves. 1, 2, 3, 4, 5. 1, 2. Can you see that's a triangle? So it's 1, 2, 3, 4, 5. So there's my next 1. So there was my first leg up, my second leg down. Now I'm starting on my next leg up, but I'm marking it again 1, 2. So that this is now the first 1, 2 of the next bigger cycle. Okay. I'm now sitting, there was that 1, 2. Now I've got here, I can clearly see there 1, 2, 3, 4, 5. So that's 1, 2. Look at the third leg. The third leg is very impulsive. 3. There's my triangle. My fourth wave is normally a triangle. There you can clearly see it. And then impulsive 5. I've done 5 waves up. What has to happen after 5 waves? I have to have a correction. There's my ABC correction. But it's a shallow correction. Can you see that it also comes back more or less to opposite the 3, 4 here? Now we're actually sitting above our moving average as well. There's the 200-day moving average. I'm on a daily time scale. Now we've moved above our 200-day moving average. It's also starting to find the 50-day moving average as support. You can also have drawn a trend line in here like this. It's now starting to exceed that level, going up. So there's now my next 1, 2. There's the 1, 2. Now I've made this in black, 1, 2. Here's of this black. This is my next leg up, 3, 4. Within this cycle here, there's 5 waves. 1, 2, 3, 4, 5. So these are subdivisions. These red markings here, 1, 2, 3, 4, 5, are subdivisions of this bigger leg here. Because I've marked this in black, 1, 2, 3, 4. And here comes my 5th leg up. This one is blue, 1, 2. I've got a 3 in here. This is the blue 3. This is the 4th leg. Could be the 4th leg down. And we could have a 5th leg up to here somewhere. But now this is.
So where does Bill Gates, where does Elon Musk talk this thing up?
I think it was either here or here. It was somewhere here. Now
So he didn't really have a major influence in anything.
No. And any decent market, one guy opening his mouth shouldn't affect the whole market. You're quite right. Once you start understanding Elliott wave theory and you look at your patterns and your impulsive structures and your corrective structures and you draw in trend lines, everything becomes a lot clearer.
So we're going to buy Bitcoin on Tuesday.
No. Let's just get back to what's happening here now. So now, this is a bull market up. I'm going to get back to this. This was a bull market going up because Graham asked me something just now, and he said to me, I can't remember your exact question, but basically you said something to the effect of hindsight, and hindsight is a wonderful science, but there are things that happen in here that give you clues already as to what's happening. If I couldn't see what was going to happen there, in other words, I'm sitting here, I can only see up to this point.
Yeah. My
divergences are my first warning. Graham, you obviously haven't listened to that Tuesday night's recording yet, but in Tuesday night, this RSI, you see it says RSI on the left there. This RSI is a momentum indicator. This actually indicates the momentum of the market, and it's a mathematical calculation. It's an indicator that you put on the bottom of your chart. You go to indicators, you go up here to insert, and then you go to indicators, and you go to trend or oscillators, and or custom, and you'll find the RSI. There's the RSI. You'll find the RSI, and then you can attach it to a chart. So if I click on there, then it brings up a table like this. I just use the default values. I say okay, and it's put it in at the bottom of my chart. I'm just going to delete this one because I've already got it in. So there's my RSI indicator. Now, RSI indicator uses mathematical formulas, but what it's basically doing is it's looking at the way the price is behaving, the closing price, and it's also looking back over a certain period, and it's subtracting the new closing price from previous closing prices, and that way it works out the momentum of the market. And the momentum of the market is very much like a you put your foot down on the accelerator in a car and the car starts going. This is accelerating. It's accelerating up here. It's an impulsive move. Here, the accelerations are becoming smaller. The accelerations are becoming smaller. And that's why the RSI, the momentum indicator, you can start seeing there's a decline in the momentum. In other words, basically what's happening is the buyers are running out. That's in simplistic terms what's busy happening. Down here, a lot of guys are buying, especially after this first 1-2 over here. The guys have seen that this leg here did not go below that leg over there. So this is the start of a new bull market. This 1-2. They can see that this was an impulsive structure. They can see that this was corrective. So what you're trying to do the whole time is you're trying to identify what mode is the market in? Is it in a bull mode, or is it in a bearish or in a corrective mode? Because based on that, it will give you an indication of where to get in, where you must buy. That's all this is about. That's actually all the last 4 weeks has been about, and the next week or two is about identifying areas where you can buy, where it's value and where it's safe to buy. If you bought over here, you know that your stop loss, if this price had gone below this level, you know that something's wrong. The way you're looking at the market, your analysis is wrong. But that means you're only going to have this loss. Your loss is small if you bought there and your stop loss is over here. And that's why I keep on repeating this about your risk is defined. By meaning it's defined, it means that my risk is small. My risk is defined. That's where I got in. If I'd bought there and the market starts coming down and it goes below that level, I know I must get out. Or I bought there and the market goes up and it turns and it breaks below the level I bought. That's why you use stop losses. So that's why this market really starts accelerating, is because guys now realize that they're into a new bull market. Yeah, also now you can see here there's an Elliott wave, there's an impulsive structure up here. There's a 1, 2, 3, 4, 5. There's a correction. It's above your 200-day moving average now. And now the guys really start waking up. The guys that weren't clever enough and didn't buy here now start realizing what's actually going on here. So more and more people start piling in, and that's what happens. And then the market really starts accelerating. It becomes even more impulsive. That's why your third leg is often the longest leg, because most guys start realizing that it's a new impulsive bull market cycle, and they start piling in. And that's what makes the third leg a lot longer. But this is actually a long third leg here. This is a 1, 2, 3, 4, 5 inside this longer leg. Getting back here. There were a lot of warning signs here about what was going wrong here. You've had 5 legs up. The point I was making just now as well is that each one of these corrections is correcting just the previous leg. This correction is correcting just this leg. This correction is correcting this leg. This correction is correcting this leg. But now, after 5 waves up, we've had a full 5 waves going back a year and a half. This, what's happening here, this correction is busy correcting this whole cycle. So the correction is much bigger. It's not correcting just this last little piece here. This correction is, I'm repeating this correction is busy correcting this whole move that started in 2019 already. And that's why this correction is so big. Look how big this correction is compared to these previous small corrections here. When this happened here, which is here, my first clue that this is going to be a bigger correction. And this is not just a small correction. This could have been an ABC correction, kind of like correcting, let's say, this leg up here. It could have been correcting just this leg. But the fact that this was an impulsive move warned me that there was more to come, that there was more correction coming. So this would have been a good place to buy, because this would have been this is a fib level of, let me go and take that out. From this level here, this would be, there you can see it's a 50% off that level. It comes back to 50%. Can you see that this level is also more or less opposite this level where there's support? Also, this leg down here looks very similar in length to this leg, although this leg is longer. But you could have argued, if you hadn't understood Elliott wave theory and you didn't see that impulse there, you could have thought, okay, this is an A, B, C correction. So now you buy here, and there's nothing wrong with that. The same way as this was a correction, you buy there. Plus, this is on the moving average. This is sitting on the 200-day moving average. This is sitting on the 200-day moving average. So these are all very good places to buy. Plus, there's a trend line running up here. These are beautiful buy areas. ABC correction. After an ABC correction, we want to buy. That's the way we can get into a bull market, is we wait for the ABC correction to take place, and then we buy. So we buy there. Now this correction takes place, so we buy there, because so far it only looks like a correction. If I move this chart up, we don't know yet what's going to happen. Although looking at this RSI, looking at the 5 waves, looking at this major trend line, this is not a small trend line. Eh? This trend line goes back even further. Especially on the log scale, you'll see that it goes back further. So we've broken a major trend line here. But let's say we buy there, which there's nothing wrong with. As I said, you could have seen this just as a correction. Now the price starts going up. But look at the way it goes up. Initially, it looks impulsive. And then it starts petering out. Now at this stage here, I could have already drawn a trend line in. I don't know what's coming. But as soon as I see a new move like this, the first thing I do, as soon as I get this first correction taking place here, I already draw in a trend line. And I obviously take my trend line past the end of the graph. The same way as here, I don't know what's going to happen over there. But I've already got this point here, I've got this point here, I've got this point here. I can already draw a trend line in. So you don't go and draw the trend line in once it's broken there. This trend line, you've drawn a way back already. So as soon as this market comes back onto that level, I've already drawn this trend line in. Now suddenly we're getting, can you see this is not an impulsive structure. It's not an impulsive structure like we've had in the past. But this has been an impulsive structure towards the downside. So this is already telling me that whatever started here, this correction that started here is part of a bigger correction. Otherwise, this wouldn't have been impulsive. Now this move up here is very corrective. It's corrective and it's overlapping. And then it actually breaks the trend line there. Look how it goes back and tests the trend line. So this trend line here that was support there, support there, support there gets broken. Then the price goes back up and tests that same trend line. And now people are starting to realize, hold it a second, this correction is not finished. So guys that were buying here have put their stop losses here. Plus, now you get new guys coming into the market who've been wanting to short this market. So you get people looking at this, looking at this. So people who've bought here, their stop losses are right here. And new people are coming into the market wanting, guys have been waiting back here, guys who are negative, are not pro Bitcoin. They've been waiting all along to short the market. They're all climbing in here now and they're shorting the market. And now look, it becomes impulsive again towards the downside. This is an impulsive structure. It's not a corrective structure. This is corrective. It's overlapping. This is impulsive. And look at the wave formation you get here. 1, 2, 3, 4, 5. In this leg here, there's 1, 2, 3, 4, 5 moves. All right. So up to this point, I've put in here A/1, B/2, C/3. And the reason for that is initially this correction down. Remember when you have an ABC correction, your C leg will equal your A leg. So that leg down, goes up, and you have this leg down. You can see that leg more or less equals this leg. You guys with me?
Yeah.
That leg down is equal to this leg. So you'll actually have guys ignoring this impulsive structure, ignoring that impulsive structure, who start buying here. Because this is a good place to buy. There's also wonderful support. Look, it's opposite this support here, which is almost opposite that level. So this is a very good place to buy. But with this leg now becoming longer, you realize as well that this is not just an ABC correction, because if this had been an ABC correction, where this was equal, with this leg here was equal to that leg, this price would have turned here and it would have started making a new impulsive structure to the upside. Would have made a 1, 2, and then it would have started 3, 4, and it would have started going up again. But now it's broken that distance as well. And look now how it really accelerates.
But geez, how are you going to see that? Because I mean, most of us would think that's a fantastic buying opportunity at 42, 43, 204. You'd have folded your boots there. And then you see your ass.
Yeah. You mean you're talking about this place here?
Yeah.
That's first of all why you have to have stop losses, but also look at this, look at what happened here. It's that level there. Okay, that's where this leg level is equal to that, where this leg is equal to this leg. is right here. That's that support level I've got going back there. Look at the way the
Yeah,
price reacts off this level. This is not impulsive. This is a piss-woolly little ABC movement up here. And it drops straight back down. Even
Yeah, I think
if you can't see what's
if
going
it
to
was
happen.
me, I would have bought the whole bunch there.
That's unfortunately the way the market works. The market's not your friend. It's not your,
Hey.
it's new Mike in
Jeez.
Okay.
Hmm.
I'm repeating myself a lot, but this needs a lot of repetition. This RSI here, this overlapping structure here, the fact that we had 5 waves up going back to 2019, those are all things that start telling you, be careful. Be careful. This is an impulsive structure towards the downside.
And if you look, Jock, sorry, let's get back to the price on that support line there.
Yeah.
Yeah, just there.
Yes.
If you look at your RFI, that
There's the
the
divergence,
trend
yeah.
actually shows up.
It shows
If
the
you draw a
divergence.
line there, it shows
I
up,
know.
not down.
I know.
Your relative strength is up.
I know.
So
I know.
you would have looked at that and said, "Oh, my relative strength is up." It's contrary to the downward spiral.
That's why stop losses are so important.
Switch
Yes.
off the phone.
But this is bigger. You see, now we know that. Now we know that that's what's happening here. We could remember what's happening here. We're correcting what started back in 2019. This ABC move. But at this point, remember, I've got there A, B, C.
Yeah.
So before we even saw what happened here, there, okay, ABC. So now the correction's over. Now this price must start heading towards the upside again. It must start being impulsive. Let's just go there. That's not over here. So now I've got an ABC correction. But what's concerning here for a start, remember if I hadn't seen any of that, but it still applies. For a start, this leg down now is much longer than this leg. Now, normally an ABC, your C leg is equal to your A leg. So that C should have ended here. That's where your correction should have ended. And you can actually see here there's a 5-wave move. Look here, 1, 2, 3, 4, 5, up to that level.
Yeah,
So that's beautiful. That's beautiful. That's showing me my correction's finished. I've got an ABC correction. There's my 5. Remember, this was a 5-wave move. So and remember, your C leg is always a 5-wave move. Think back half an hour ago when I was talking about corrections. Your ABC, remember I showed you that your C leg is always 5 waves.
Yeah.
Remember that your A leg is not always 5 waves. Your A leg is often just 3 waves. Must I go back there on that diagram and show you guys?
No, it's fine. I understand.
This wasn't 3 waves down. This wasn't just an ABC. This was actually a 5-wave move down. Which means that after this B leg up, there has to be another 5 legs down. If this was only 3 legs, this still has to be a 5 leg down. And here comes your 1, 2, 3, 4, 5.
Except
And that's a good place, like you say, that's a good place to buy. You'll notice that this divergence you're talking about as well. Can you see it's only diverging here? It's not diverging from here.
No. No.
Okay. It's a very small divergence, just over here. But the minute this happens, I don't even have to see the rest. I just have to look at that. If that's my C leg and my correction's finished, that's not the kind of behavior I want. I want when a correction's finished. I'm sorry.
We only talk about it one day. It's not exactly.
It doesn't matter. It doesn't matter. If a C leg's finished, look at any one of these corrections. Look at this. This is an ABC correction. Can you see it? The impulsive behavior when this correction's finished. There's my triangle. There's an impulsive behavior up here. It comes down again, but something's happening. Look at this correction here. There's my trend line. There's my triangle. Look at that candle, it's much bigger. But silence, this other thing. Look at that reaction off there. All these places, there's a reaction off here, which goes, at least has a bit of legs. This has got legs. Look at that. It's got legs going up. It's impulsive. Here the corrections are getting a lot smaller. The impulse is getting a lot smaller. But look what happens here. This is piss willy. There's nothing happening here. And then it drops down there.
That's where Elon Musk talks shit about Bitcoin.
Most probably, yeah, somewhere.
Bet you.
But now,
anything you like.
Getting back to the point I was making here as well. Now I want to start looking into the future, and that's why.
Then it just goes sideways.
All right, but now this is where the debate now comes in, because remember, it's not just my opinion. I'm reading opinions of a lot of other guys and other guys who do Elliott wave, study of Elliott wave, and so forth. So now I want to show you the predicament we're sitting with here. First of all, this is a 1, 2, 3. This leg down is longer than this leg. So this is my third leg, 3 leg. It's not just the ABC. The C would have ended there. That's the third leg. Now, thinking of the Elliott wave picture, remember this is now opposite. This is now inversive. That's 1, 2, 3, 4. There's my fourth leg up. And now either the correction's finished here, and this is a ABC with a very long leg. Okay. But it worries me that this is such a long leg, which is impulsive. Now we come back 4. Now 4 can either be there, or 4 can also be here. There's something else you must now realize.
A big down coming.
So in other words, 1, 2, 3, 4, 5. There will be my 5. Remember, then I've got my 5-wave Elliott wave structure in a bear market. It's inverse now to my bull market. Then I've got my 1, 2, 3, 4, 5 down to there. Okay. Once it gets here, if it gets here, it might not get here. But if it does, you can already see
it'll do an ABC up.
It will do an ABC up. It has to. After a 5-wave move down, it has to do an ABC correction. Even if this price wants to come all the way down. Remember, we're busy correcting here. We're busy correcting something that started in 2019.
Yeah.
So this first leg down, if this makes a 1, 2, 3, 4, 5 down to here, then this will actually be A. Then we'll have a B, and then we'll have a C.
Yeah.
Are you guys with me? So this 1, 2, 3, 4, 5 will then become my A leg. That will become my I'm going to put this in a different color. That will become A. And let me draw that in black. And let me make it a capital letter A. Then we'll have an A. Forget about that C. That C, let's just forget about that C for a minute. Then this will become A. Then this will become a, then we'll have a B leg up.
You're smoking your socks.
And
I'm gonna
then
go there.
we'll have a C leg down.
Oh, okay. Yeah.
To complete my ABC pattern. Somewhere down.
Shall I wait for the price to get to 17,515 and then
There's
see
a
what
lot of
happens?
there's a lot of guys who say that it's got to come back and test this level. This
Okay.
was when Bitcoin really went apeshit the first time. Remember, it came from down here 3,000 and it went up to nearly 20,000. This is the 20,000 level. This is in 2017. There's a lot of people that say that this thing can easily come back and test this 20,000 level. And if you look at it, this thing, this A, B, C, it kind of like ties in, and then it will carry on going up. I don't want to sound negative. All I'm doing here is I'm giving you guys, I'm trying to let you understand the way that a lot of other people are looking at the market, and I'm giving you all the options. Okay, so that's one possibility. But let's just go back here for a second and just look at something else here. That's one possibility. Now to get back about what's actually happening inside here. Let me take that Fibonacci out. Let me just move these up so that it doesn't create
There's a lot of noise.
Let me take this Fibonacci out as well, get rid of some of this junk here. So we're going to have a look at what's happening here now. The question now is, this is definitely a 1, 2, 3, 4. Now this level here, this could be a 5. The 5 could be in there already. In other words, 3, 4. There's my 4. 1, 2, 3, 4, 5. You get something which is called a truncated fifth. And we can look at that next time. Sometimes the market doesn't, if the market is very bullish here, then this 5 doesn't necessarily have to come below this third level here. You guys with me? The same way. Let me draw that. I don't know if I can draw on top of this. I've never tried this. Okay. 1, 2, 3, 4. There's something called truncation where normally the fifth wave. Can you guys see what I'm drawing here?
Yeah.
Okay. Normally, well, actually longer. That's normally the longest leg. I've drawn this too long now. So normally that's the longest leg, and very often your fifth leg equals your first leg. That I didn't tell you earlier on either. That if this is the longest leg, remember your third leg can never be your shortest leg. But your fifth wave, and especially in commodities, and a lot of people see Bitcoin as a commodity, your fifth leg can actually be your longest leg. Your third leg can never be your shortest leg. That's one of the rules as well. But what sometimes happens is that, let's say this market's very bearish, is that you'll get 1, 2, 3, 4, and that this fifth leg up will truncate, and it might not go above this third level. Something fundamentally happens. In other words, from the Federal Reserve, something on a global scale, something important fundamentally happens, which then causes this truncation, that this fifth leg doesn't go up here. And the same way now down here, if this market's very bullish, this fifth wave could be in here. Normally your fifth wave must come below where the third wave stopped. And this looks like a third wave because it's the longest wave, okay? This is the longest wave. This is much longer than that leg. So this is the third leg down. So now the debate is 5 finished here? And now we're going to get our ABC correction. So in other words, once the 5's finished, we need to get A, B, C. This A I showed you down here, B. Remember, I drew this in just now, this A, B, and then the C down there. This leg up to that B will consist of 3 legs. It will be a ABC. You guys with me? So if this impulsive structure is finished here, it could be finished completely and we could go into a new bull cycle going past this top. Or this can just be the A leg down, then we get the B leg up, and then we get the C leg down. Okay, down here. Because of this impulsive nature here, there's a very, very good chance that Bitcoin is not going to exceed that top very soon. If this was just a shallower correction, we could have gone through there. But at this point in time, what everybody's saying and what everybody's looking at is because of this impulsive nature of this down. So this will finish our A leg, 1, 2, 3, 4, 5, A. Then we'll have a B leg up, and then there'll be another C leg down. But the important thing is there's a lot of money to be made in here. If we can identify whether 5 is there or 5 is here, and that's what we don't know yet. Is 5 complete there? Or do we still need another leg down here to complete the 5? So we're either going to rally from here to go up to that B, or we need to come down here and then go up to that B. Are you guys with me? Graham?
I am sort of. Jacques, I need to actually leave this meeting. I got a bit of sore neck, etc., and I'm saturated as far as my concentration is concerned. So I would rather listen to the rest of this thing, on the recording, if that's okay. I don't want to. I've lost track.
Yes,
Yeah.
I've given you guys a hell of a lot of information today.
Yeah,
I think we must call it a day anyway, because
It's 7 o'clock already.
We're gonna next time we're gonna look at all of this again. I'm gonna send you those pictures that I had earlier on. I'll post them on the group. Then you can have a look at that, at those structures, and have a look at our corrections work.
Many thanks. Yeah.
And have a look at any graph. You can take any graph. Just before you go, let me just show you something interesting here quickly. I'm going to show you let me show you. I'm going to show you the euro US dollar. This is on the daily time frame, okay? I need to get rid of this marker maybe. How do I do that? I don't know. Forget about that red mark there. Somehow I must be able to rub it out. I'm just going to pull this away. I'm on the daily time scale, eh? I'm just going to squash the thing a bit. This is the March, this is the COVID, this is March last year. What do you guys see here? What do you see now after what I've
Almost looks like an Anglo share. That's almost identical to Anglo.
Can you guys see the impulsive structures? Can you see the 1, 2, 3, 4, 5? Can you see the ABC correction at the top?
Yeah.
Yeah, I can.
Very clearly.
1, 2, 3. Yeah.
Yeah, there's the first leg up. Remember here the market was coming down. Look how overlapping this market is here. It's very, very corrective in nature. It's overlapping. There's the bottom. There's the first leg up, 1.
Big long leg.
Big long leg. I'm not just gonna let me just do that. Now I can just go. So if I'm just going to label this very quickly, I can say that that's a 1. There's my ABC correction. You guys see it?
Yeah.
ABC. Can you see that this did not go below that level? Otherwise, this wouldn't have been a 2. It's one of your first rules. I'll send you a list of rules as well. All the rules I'm talking about. So the first rule, the second leg down mustn't go below there. Otherwise, this is not a 1, 2. You can look in here. There will be an impulsive structure in there. Can you guys see it? If you actually go zoom in, if I just do this, if I'm going to put this, there's my marker now for that low. Now I'm going to go into the 4-hour time frame, and let's just go there. There's that low. Can you see here? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Clearly, 1, 2, 3, 4, 5.
Yeah.
My first clue that this is a possible bottom is the fact that this impulse. You guys can go and look at gold. You can look at oil. You can look at the S&P 500. You're going to find all the shit I'm talking about. Then here comes the A, B, C correction. There's also, obviously, what you can do is drawing trend lines here. I've already got that point when that two takes place. So the first thing is I draw in a trend line. I don't even need to see what's happening in the future yet. The minute that happens, I already draw a trend line in. The minute I've got that point there and that point there, I already draw that trend line in, okay? Because I don't know what's going to happen. But now look what happened. There, I've broken that trend line. That 2 didn't go below that level. That's an impulsive structure. This is corrective in nature, ABC. So now here we go. There again, comes up, comes back. Remember here there's still a bit of confusion. You see this trend line, it didn't go below this trend line.
Yeah.
Now things start becoming more impulsive. Here starts going above the moving averages as well. And getting back to the daily, there's that 1, 2. Now there's another 1, 2, 3, 4, 5. So this is now, I'm going to put it in a different color because this is now subwaves, all right? So that's 1, 2, 3, 4, 5. Notice now, notice this 3, 4. Notice the impulsive structure. That's now 1, 2. Forget about the black now, because this black 1, 2, then I'm putting a 3 here, a black 3. So you guys are starting to understand how I'm labeling this now. In other words, I'm taking, that's a 3, here's a 4, a black 4, and there will be a 5 up there. Okay, so there's my black 1, 2, 3, 4, 5. But within this leg here, I've got a 1, 2, 3, 4, 5. Okay. Look at the fourth, look at the triangle here in the fourth leg. Look at the triangle here in the fourth leg again. Look at this corrective structure, ABC. Plus there's a triangle in here. Here's a triangle. If you hadn't been, this is now the euro dollar, you wanted to buy the euro, beautiful place to buy, gives you another opportunity to buy. That's a 1, 2. It didn't come below that level. Now it starts accelerating. Now everybody starts realizing, but this is a new impulsive structure. Remember, this was corrective coming down here. Now it really accelerates. You see how the third leg is longer. You see how the third leg is longer. Inside here, there's again a 1, 2, 3, 4, 5. Inside this last leg here, there's a 1, 2, 3, 4, 5. Now we've done 5 waves up. Now there has to be a bigger correction. Plus, look at this divergence here. Off that top there. Look, RSI is much lower than that level. This is on a daily, eh? We're not on a 4-hour time frame here. This is on a daily time scale. We've done 5 waves up. We've got a divergence. And this is where we're sitting now. A, B, C. Plus, here's now a triangle that's formed here, and it's busy forming. You can actually draw this right back to there if you want to, if it's just a normal.
So where's it going?
But there's
down.
Now we don't know. Is C going to be over there, or is it possibly going to be here? In other words, where where this leg.
Well, it doesn't matter whether it's where it is, but it looks like it could crash down.
Where this leg is, yeah. So C might either be here, where this ABC, where this C leg equals this A leg, or it can be here. It can be a triangle busy forming here, and then it can break out again. Okay. I've given you guys a lot of information.
Yeah.
But can you see, it doesn't matter what instrument you take, you need to have an understanding of Elliott wave theory and how impulse structures work and how corrective structures work, because these corrective structures are not impulsive. They're overlapping. And they give you an opportunity to get in again. Here's also a trend line here that got broken. There'll be a trend line in here there's a trend line that got broken on that up line there. You could have shorted there. Look how this overlaps here on this trend line. It's trying to decide whether this trend line is valid, and then it breaks this trend line.
There are 2 support lines under 4 and A.
Yeah. Can you see what's
It's
also
support line A, new support line.
This one.
Yeah.
Yeah, and can you see
that's your new support?
Can you see that this is all coming back to this level here?
Yeah.
That's why, and remember what I said to you, another one of the rules is that often when you get a correction, it comes back to the previous 4 level. So,
yes.
So this would be a brilliant place to buy over here.
Yeah.
But tomorrow's NFP, the non-farm payrolls out of states, and depending on the jobs figures that come out, it's gonna have an effect on what's happening here, on whether it's going to bounce here or bounce there or what. So tomorrow, from fundamental perspective, is very, very important, and a lot of people are watching it because it's going to influence that. It's going to influence what's going to happen on the S&P 500 as well.
Yeah.
Right.
Jacques, could I actually make a proposal?
Yeah.
I find it quite a lot easier or quite beneficial if before we have a session, if I know what we're going to be discussing, and you've got that fantastic fat book which deals with all these things, if I can actually prepare myself for the section by reading up first,
Okay.
then when we have it, I'll be able to ask you more intelligent questions if I
Okay.
have questions. And likewise, when you explain things, you're going to be reinforcing stuff.
Okay.
You know, I'm finding quite a lot of stuff, maybe because, you know, I'm not so smart, but I'm finding that I get bombarded by information, and at a certain stage I get saturated. Whereas if I could in fact prepare myself for the next section,
Okay.
I think it'd be beneficial, and it may well be that there are other people in the group who feel the same way. And with
Graham,
that
you've missed out on 2 sessions that he's
Exactly.
been talking about
Yeah.
this for 2 sessions. So maybe the 4th one I will understand.
Yeah. Okay. Well, en ek is mos net 'n dom advokaat, so julle moet ek vra om verskoning daarvoor. But
No,
short
An ek's 'n
story is-
dom boer.
It's a very good idea. No, Graham, lekker, definitely. You know what I'm really hoping is by the time I finish explaining all of this to you guys, I start understanding it.
Yeah, well, yeah, we're teaching you here, Josh. Yeah, I'm just saying that if we have the information in advance that we can prepare ourselves on,
Yes.
then that would probably be quite beneficial for us in terms of our understanding. So that instead, when you say, well, any questions, we kind of think, well, where did we actually start? You know what I mean? So
Okay.
it's just a suggestion.
I'm gonna send you guys that book. It's a PDF format, so
Yeah.
you can just you can either print it out or just
Yeah.
read it on your computer.
Yeah.
And then I'll give you an idea in there as well. And then it'll be a great thing if the chapter on Elliott wave theory is not that
Yes,
long.
yeah.
It's only about
Yes.
8 or 10 pages.
Yeah.
Because then next week, Tuesday, we go through all of
Yeah.
this again. Elliott wave theory is takes a while to get your head around it. So if you can read that chapter, and then
Yeah.
next week we discuss all of this again.
So we're consolidating, excuse the brown words, next week.
Hey,
We're going to be consolidating the information. next week.
exactly. Let
Okay.
let it sink in a bit.
Right.
Yeah.
Well, thank you very much, Jacques. I really
Thanks,
appreciate
Jacques.
everything.
All right.
I must go now because my neck is sore and my focus is, as I said, ek is nie 'n dom boer nie, ek is 'n dom skot. En ek dink die
En,
skotte is miskien dommer as die boere.
and the whiskey is getting hot.
Well, not yet. We still got to start. Okay. Thanks.
Okay, boys.
Okay,
Thanks, Jock.
Yeah.
Thanks,
Thank you,
boy.
guys.
All
Thank you,
right.
Doc.
Nice to see you.
Later.
Okay.
I'll send you guys.
Cheers.
stuff
Good night.
Okay.
Okay.
Night.
Keep well. Ciao, Graham. Craig, you happy? Any questions?
Yeah, no, I'd also like to read through that chapter as well before next time,
Yeah.
and then try fiddle with it, and then if we've got questions, we can ask them.
Yes.
It looks
Um,
like we're going to sit on our hands a bit,
Yeah,
looking at all these graphs. There's a lot of movement in the market, and it looks like your Anglo-American, Bitcoin, all of those, they look a hell of a similar. I've got the Anglo on my right here and the Bitcoin in front of me and the Ethereum, and they look almost identical.
Yeah.
okay.
It's unbelievable.
What's a lot of, if you look at the gold price and the Bitcoin price, a lot of it has been driven by the weak dollar we've had over the last year, since last year March, which is all due to the financial, the Federal Reserve, well, and the ECB, the European crowd, and pumping money into the system, and the dollar.
Yeah.
the dollar having come down since last year, March, if you look at that's why the euro looks like this. That's what gold, if you are going to have a look at gold, it's very similar, and cryptos as well. They all look very similar.
Yeah, and if the dollar strengthens, God knows what's going to do to all these things.
Exactly.
Don't have no idea. I've got no feel for it, but I have a sneaky feeling it's going to push the prices up.
The minute, that's why the Federal Reserve is so careful at this point in time to say anything too much about the interest rates and about when they're going to, inflation, and when they're going to start
Inflation and
when they're
interest.
going to start increasing the interest rates. Because the minute the interest rates start increasing, or they start getting it, the market starts getting a hint that it's going to happen, the stock market's going to come down.
Oh yeah.
And the dollar will strengthen even more.
Yeah.
What makes them most nervous is the effect it's going to have on the stock market.
Yeah. Yeah, sure.
Yeah.
Okay, boys, we'll chat again, eh?
Okay.
Yeah, cool, man.
Craig, you're right.
Okay, cheers,
Thanks very
eh?
much,
Cheers,
Rob.
Craig.
Okay.
Ciao, bye.
Ciao. Keep well.